Bom dia, boa tarde, boa noite, sejam bem-vindas, sejam bem-vindos a mais um episódio do podcast MVP, aqui do Startups, toda quarta-feira no YouTube e nas principais plataformas de áudio, para você ver as entrevistas, conversas com fundadores, fundadoras, investidores e investidoras. Hoje eu estou aqui com uma convidada muito especial, a Olga. I did ask you, how do you pronounce your surname? Olga?
Maslikhova.
Maslikhova.
Perfect. There you go.
I'm almost Russian.
Basically. Your accent is better than mine at this point.
Você certamente já deve ter visto algum podcast. Eu já estive no podcast dela, então certamente você já me viu no podcast dela, né? Então, o JCurve. E é um prazer tê-la aqui exatamente por isso. Há 2 anos, ela me colocou na fogueira me entrevistando e agora eu coloco ela na fogueira no meu lugar correto de entrevistador, as an interviewer. So, I'm in my right place and now it's payback time. You have to answer all my questions.
You'll make me feel uncomfortable, I hope. Let's see. Let's see how it goes.
Bom, a gente vai fazer esse podcast, esse episódio especificamente a gente vai em inglês, mas claro, a gente vai colocar as legendinhas aqui para você acompanhar e ter acesso ao conteúdo, né, ficar tudo certo. Vamos lá? Bora! Olga, thank you so much for your time, your attention, and again, payback time. Now you're going to have to answer all my questions.
At least you had to prepare this time.
Yeah.
To ask the right questions.
I was going to start by asking you one question I get a lot, which is, who is Olga? What is she up to? But I'll hold that so people can, so we can hold some attention of the public. Like João Kleber, I don't know if you heard of this TV person in Brazil. Para. He never gives out the thing until he reaches a certain audience.
Don't spill all the tea, of course.
Sure.
But you know what? I ask myself the same question. So we'll see if we get to a conclusion later
Okay,
on.
almost like a therapy. So this is going to be
we can explore different elements of personality.
Your relation with your parents and stuff.
Or with Brazil, for that sake.
Okay, so, but, I mean, the JCurve is on 3rd season. You've already interviewed 64 people. You're an investor yourself. So, you live in New York, financial capital of the world.
No, just capital of the world, period. Just
okay.
Don't limit to finance only.
The people from São Paulo are going to be very, very angry with that. So we have already a headline. Olga says São Paulo sucks.
It's not a capital anymore. There you go. You see, you're a professional media person.
So we have a polemic. So this is going to be huge. So sanity check here. What's going on in the market? What are you listening from your fellow investors, from founders? Where are we? Winter, spring, summer.
I mean, it's a constant summer in Brazil. Like, look at the sky. It's just, so beautiful. But jokes aside, everything is not that bad as people are trying to picture. Because when you think
the media.
Of course, you need to have a negative sentiment to capture the attention. When everything is not that bad, it's not that interesting. But I think, so I interviewed a lot of founders, mostly Brazilian founders, but also Argentinian founders and some investors. And the interesting thing is the market is doing way better than people expected. Even those companies that raised at the top of the market in 2021, most of them are still around. Mm-hmm. In fact, I know about one definitive high-profile failure, but everybody else is somewhat surviving. Some companies are actually pretty much thriving, and you can look at the example of CRM Bonus that raised on top of the market in 2021 at $200 million valuation, and now they just closed the round with Bond Capital, which is Mary Meeker's fund that represents it, and they're the first investment of Mary Meeker in Latin America at $400 million valuation, which is 2 whatever valuation step
in
up
2 years.
In 2 years, despite the fact that valuations in 2021 were not perceived as reasonable by any stretch of imagination. So I think the market is not doing that bad. I think the whole idea that everybody understands that growth capital gap has to be filled, and it is being somewhat filled. You have Bicycle Capital, which did, the closing, and they did the first deal here. Then you obviously have traditional suspects as General Atlantic. You also have VEF, Vostok Emerging Finance, that has built some portfolio here. You have Lightrock and Advent, who have a blended strategy where they invest in tech and not tech, and kind of look at that as a diversified portfolio. Yeah, so you have players. I think what we're seeing right now is the huge opportunity in growth, because you have this cohort of companies that had to shapen up, trim the fat, cut the costs, improve the margins. And we just had the conversation with Sergio Furio, who finally got to profitability 10 years in, and with good margins and with good understanding how you're going to continue scale both revenue and profits. So the market is not doing that bad. I think what is really interesting is that a lot of companies that raise venture capital funding at this point, they understand that the investment period of the funds that back them are coming to an end, and they need to figure out an exit strategy. And this is where I think things get more interesting, because a lot of funds have this portfolio of companies valued at like over $1 billion post Series B, which cuts the opportunity to exit through an M&A, because the M&A deals in Brazil are happening, and there are many, but they're happening at like 50 to $150 million range, and nobody wants to sell
which is
that.
Historical, actually, right? We don't have big exits. It's just so.
But the market is also very new. Like you kind of, when you think about the market as a market, right? It's not even one full life cycle of a fund just yet. Yeah, the first funds started to emerge in 2005, 2010, 11, but it was like an elephant in the room. They were trying to figure out like how do you do VC business in Brazil. But now everybody kind of understand how to do VC business in Brazil. And if you think about that, like when that started to happen, it's like 2017, 2018. So you don't even have like the full cycle yet. So when you look at that from the perspective of how much market has achieved without even going through the full cycle of the fund, which is basically 10 plus 1 plus 1, is absolutely impressive. And at the same time, so you have this like cohort of unicorns. And I think the reason why there's so many billion-dollar companies in portfolio is because it was a vanity fair. The market is young. Everybody wants to have A16Z on your forehead. And for A16Z and for a lot of like platform players in the US, putting that valuation tag is actually not a big deal, because the amount of capital that they have under management and the amount of capital that they deploy in this portfolio in LATAM, like it's a write-off. If it doesn't work, great, we're just going to write it off, and we don't even need to notify our LP base about that. But the local VC have to deal with the consequences of this $1 billion tag. And this is going to be interesting to see how everybody's going to be dealing with those consequences. And I think there will be a few scenarios. One scenario is there's going to be, creative structures created to extend, or, for players like VEF, for example, it doesn't really matter because they're long-term patient capital. They have no restrictions in terms of exits. But for the funds that have restrictions, I think part of the portfolio will attempt to go public when the window would be opening, and I think it would be opening
sometime in the future. You can't count on that.
I mean, you can assume at this point because you already see some dynamics. I think the thing about IPOs is that you really need to be either regional or global to succeed at IPO. Because if you are focused on one market, then you have your retail base of investors is extremely, extremely limited. So I see a lot of companies above $1 billion valuation today. They're thinking about, okay, so how do we become regional or global, or at least position ourselves as someone who is becoming regional or global? And I think that's a very interesting market shift that is happening, that is brand new on the market. And we're going to see more companies following the global route. Because when you think about what are the companies that are successful in public markets, right, today, you have Globant, which is an Argentinian company. You have Mercado Libre, obviously. You have Nubank, but Nubank is also kind of a regional player. They still
Mexico
have huge, Mexico and Colombia, and so on and so forth. So when you see the success cases, they have to go beyond one country. And this is an interesting thing because Argentinian companies, for example, they always had to go beyond one country. And that's the reason why you can can see so many interesting global leaders coming from Argentina. But for Brazil, you always have an opportunity to be big in Brazil. Yeah. But then you have businesses like CRM and Bonus that can build like multi-billion-dollar business locally. And at the same time, you have businesses like Pismo, that was acquired by Visa for $1 billion. That makes no sense to build itself as a local player because your market is a global. The whole global market needs what you're trying to solve for. It just, Brazil is a test ground for that because financial service companies are so advanced. But overall, this problem, it just exists for everyone. And like, why would you limit yourself just because you kind of can build yourself big here when you can build yourself big everywhere? So yeah, that's something that I'm seeing. And then the other thing would be is that for those companies that are not yet regional, not yet global, don't have those plans immediately, and don't have sustainable unit economics yet, which is also a big case, I think this would be something that VCs would try to focus on helping achieve profitabilities to their portfolio companies, and then try to partially sell to U.S. investor in the next round and kind of create an exit through that strategy. Yeah,
I was talking to some investors the past days, and one of them said that there's a growing demand or growing interest from U.S. funds. Again, they're coming back to the table. Yeah. Oh, we want to hear from you, from Latin America, from Brazil. Not that they're investing. This is another point. This is another point. Investors still have their back up against the wall. They're not moving. But I mean, it's at least there are talks, right? How do you see the interest from U.S. funds? I
mean, listen, there should be an interest because everybody's betting on AI. AI needs energy. Like, where do you get all this energy? LATAM as a region, Brazil as a country has a lot of energy, clean energy, and so on and so forth. Like when you think about data centers and so on and so forth, there's a huge advantage and the reasons why people are looking at LATAM. And then again, people are starting to look at more vertical applications of AI. Okay. Vertical applications mean big industries where AI can improve the processes, facilitate the processes. And Brazil specifically has like a number of big industries, like agriculture, that operates at a global level, where a lot of technologies that companies are backing are very relevant, right? And then I think another thing, it's something that I just started to see. Next week, I'm going to record an episode with this company, Jeeves.
Jeeves, yes.
I don't know how well they're doing. Seems like they're doing pretty well. But just the whole idea that U.S. native company is building its business, focusing on Latin America, because Brazil, Mexico are two of their largest market. They have teams in both markets. And kind of understanding, even like the intrinsic understanding of the founders, that if you pursue, building a company in a certain domain, like financial services, maybe you don't need to focus on US or Europe for that sake, because the state of financial services in the US is way behind than Brazil. Or maybe if you want to build something, in e-com or do digital transformation or whatever for like large e-com players, maybe that also makes sense to do outside of the US. Sure. Because the market has like faster, adoption dynamics. It's easier. It's like, even like when you think about selling to enterprise, it's still faster to do in Brazil. So this kind of, there's like many layers of this kind of momentum that are happening. From one point, Brazil and LATAM totally has an interesting angle with respect to all these AI tailwinds. The second thing is that you already see a number of really high quality companies coming from the region, seeding talent, spinning talent, and so on and so forth. You see players like Bond entering the region and accepting the complexity of business models of local companies. Yeah,
that's the thing, right? The US is very competitive, so it's a better market, it's a bigger market, but it's very competitive. On the other hand, working in Latin America, Brazil, I mean, you have less competition, but it's tougher in terms of building stuff.
Yeah, because you have to build infrastructure. And I think like once you have more players like Bond understanding that you can't really take the playbook that exists in the US and bring it to LATAM and evaluate companies from the perspective of like how Bessemer looks at their B2B SaaS portfolio in the US, the more people would be comfortable with deploying capital. Because when you look at the necessity to build infrastructure, it is absolutely tough for sure, but it also creates a very strong exit barriers.
Yeah, the moat.
Like, once you build it, you know? It's like what we talked about, the Cirque situation, you know? The guys had to create the whole infrastructure from scratch and do it in very limited number of years. But look at them. I mean, raising $100 million from Mubadala, first tech investment from like one of the largest sovereign funds in the world, like very non-trivial kind of investor, very aggressive, very consistent with monitoring metrics, you know, very deep-pocketed, long-term oriented. So these all are great signs. But I think the most important thing is that really the world needs to be slightly educated in terms of what it takes to succeed in Brazil, because you don't need that about every market, right? Like when you look at small markets, like they don't really have an opportunity to deliver companies on a power law basis, then okay, you can kind of be ignorant. But when you look at the state of the venture capital in the US today, right, it's a very mature asset class.
Sure.
It's not a cottage industry, it's an asset class. And as any asset class, when it matures, it drives the returns down. The average returns in the US is very, very low. Outside of the usual suspects like Sequoia, Excel, know them.
Tiger.
But even for LPs, like good luck getting onto their LP base. They have this very established, very deep-pocketed, long-term LP base in forms of endowments, pension funds, and so on and so forth. But the rest of the market is actually not performing that well.
Sure.
So even if you're entering the venture capital in the early stage,
so it is that some Brazilian investors and some Brazilian funds are starting to access those kind of funds, right? They're looking for LPs outside of the US because they need money, right?
Yeah. No, everybody needs money at this point. Like, welcome to the club. And by the way, if you succeeded raising that in Middle East, no matter how much money on Middle East is. But I think the whole market maturation also leads to the point that even GPs start to look elsewhere in order to deliver the returns that they promise to their LPs. And here comes this big market situation, like nobody expected China to be a market where you can deploy US playbook, right? But why do people expect this from Brazil, for example? Or, nobody expects US playbook to work in India. Like you go and look at the funds that somewhat successful in India, it's a very different, like they have local operations, they have local teams, they kind of understand the context. But for some reason, people don't assign the level of attention and the level of informational familiarity that needs to be achieved to the market like Brazil. And I think that has to change.
Right.
And I think the biggest problem with that is that Brazil has bad marketing, bad PR.
Yeah, I know.
All you see,
we don't help, right? As a country,
no.
we do all the wrong things.
Well, there may be...
Brazil, you may have heard this one, but Brazil is a very stable country. You can't rely on it. We have no chance of getting anywhere. Those are some sayings we have here in Brazil.
Yes, but this is not true when you look at that. And I think it's easier to see as an outsider because, what do you see in Brazil today, right? Well, first of all, you see unbelievably robust financial services markets. The most robust, one of the most robust, if not the most robust in the world. Central Bank of Brazil is ahead of everyone.
Sure.
Fed are trying to replicate what they're building. And I think Central Bank of Brazil, probably with Pix, they were even more successful than in India with
last year at Brazil Silicon Valley, Angela Strange said that she envied our central bank, that she wanted the US to have something like the Brazilian central bank.
Yeah, but it's not possible, because of the market structure. Market structure in the US is very different. But Brazil has central bank. Brazil has robust financial services infrastructure, which probably would not even change with the end of the tenure of Roberto Campos Neto, because everybody sees the positive impacts of all the product and business strategies that a central bank was deploying. So you have that. You have very fast digital adoption. Like Brazil is the market, a very important market for Facebook, Google, Netflix, you name it. It's important and it's interconnected. So there's a lot of progress that has been done, despite all the market volatility and so on and so forth. And then when you think about how the growth companies are doing in Brazil, they're doing much better than a lot of growth companies in the US because of this resiliency that is being baked in the founders from, the moment I feel like they were born.
Since always.
This is funny, right?
But, I mean, there's a joke, of course, when you see the US, people screaming, we have a 5% interest rate. Come on, 5%. We had hyperinflation till yesterday. We have like double digits.
And people don't know what to do with this 5%. Like, what do you do with that? I don't know. Who knows?
You do stuff.
Wait, we're not like deploying capital to venture capital anymore. Like, okay, but how do we grow? We don't even know how to grow without venture capital at this point. And Brazilians, it's like, venture capital is great, but it's just one of the options, but it doesn't mean that if there's no venture capital, I'm not going to go ahead and build my business. Right? I'm going to go and build my business anyways. And that's the reason why you really need to understand the complexity of models. You need to understand the infrastructure that needs to be built. You need to understand the whole fact that majority of markets require education. When you introduce digital technologies like markets, and I mean like industries, that means that service component plays a big role. And in the US, like the common perception a couple of years ago was like, oh, we don't want any service. We don't want any labor cost. Like we want it all to be SaaS. But it's not possible in Brazil because like you can't just dump SaaS on people and expect that they will naturally adopt it. No, you need to educate them. You need to explain how do you integrate that, how it complements what you already know, and how do you build a new knowledge base and so on and so forth. And once people start, getting more into these details, people would understand and feel more comfortable with business models that are different than those in the US. It just takes time, but it's a natural progression that is happening, and that's what I see on the market.
And I've tried to put some thought into it. I don't know if you've already written something, or maybe we can put this on this episode. But what would a playbook, a Brazilian VC playbook or Latin America playbook would look like? I mean, not Reid Hoffman, right? Not blitzscaling.
By the way, he wouldn't do blitzscaling today.
Yeah, I asked Chris and said, "Oh, so it's now that you have the money, can you do blitzscaling?" Blitzscaling was never about the money. Yeah, right. Come on, but you can't do blitzscaling. It was never about the money, but you need money to do blitzscaling, right?
You do, yeah. I think there are several ways. I think one. Several models. For the early stage VCs, I think it's incredibly important to be very price disciplined because your exit opportunity predominantly is M&A, whether or not you like it. Like you might dislike it, you might want to be public, like classic VC model in the US suggests, and you probably will be at a certain point. I just don't know if this is going to happen in the next 10 years when you need to sell off your portfolio. And understanding and being like maniacally focused on the M&A market, building strategic relationships with potential acquirers, and knowing when to sell. Like the moment the window opens, knowing when to sell, it's extremely important. Another thing is for early stage VC as part of the strategy, I think when you see a big platform player from the US coming and investing in your portfolio at a price tag that is dramatically above your potential M&A exit value, you need to sell. You need to sell your share to those people who are coming, show 2-3x multiples,
totally
2-3 multiples return. Yeah, because you need, like, what do you need to prove on the new market? And Brazil is a new market. What you need to prove on the new market is that you know how to source, how to manage your portfolio, and how to exit from your portfolio. So majority of the funds in Brazil, they prove that they know how to source, potentially know how to manage, but very few prove that they know how and when to exit.
Yeah.
And proving that you know how to exit. It's more important for a new market that proven that you can sometimes exit at like 35x return cash on cash, just because of the state of the market. So I think if you're in like early stage VC in the market that is new, that doesn't have sustainable capital flow allocated to the market from LPs, both local actually and global, then you need to make sure that you focus on proving these three things. And when you end up kind of prioritizing this Vanity Fair logos of big platform players from the US versus your ability, showcasing your ability to exit, that's when things break. Because you gotta understand what matters most, and why, given where we are in time for the market. So this is like very important. I think another important thing could be something that I really like, this idea of long-term patient capital in Brazil.
Sure.
This is another strategy, because look at Mercado Libre. It's so funny, but majority of value that was realized was not in the fund cycle. Like it was not in one fund cycle. The majority of the value of Mercado Libre was like
25 years old.
Way late. So when you see this kind of, you see that things take longer in Latam and in Brazil, because you need to build the infrastructure, do market education, and so on and so forth. Then you want to maybe figure out, okay, so how do I build the fund that doesn't have restrictions of a classic VC model? And you have examples here, right?
Okay.
You have like Lightrock, you have VF, you have like all these players. So that could be another interesting thing if you don't want to be focused on exits, or maybe if you don't know how to exit, because a lot of people don't know how to exit from the market. So that could be another interesting thing. And the third thing,
an early exit, reading from the US playbook is seen as a bad thing, right? Because you're leaving money on the table.
Yeah, but otherwise you might end up with no money.
No money.
Like so far, it's like, it's better 2x return on the market. Because think about it, like classic venture capital suggests what you bet on these companies that could potentially deliver you like 100x return, because you have tons of those who would not be delivering anything. But in reality, majority of funds deliver 1.5x return overall. And we're talking about, if you sell, say, your company is raised and then it raised at 2 point whatever valuation step up and you're selling your share, you are showing exit in a very limited time frame. So you show good IRR and you prove your ability. And the more exits like that you show from the first fund, the more comfortable LPs will be allocating you more capital in the next fund. So you'll have to look at this initial couple funds as a proof of the concept funds, because the market is new and you need to educate.
That's good.
Yeah, you need to educate LP base. They need to feel comfortable. They need to know that no matter the cycle, no matter is it upturn, downturn, whatever, you know how to do these three things well: source, manage, and exit. And then the final so it's like for early stage is this like price discipline, focus on exits early on, building strategic relationships, playing with the corporate structure for the funds, and kind of trying to build something long-term and trying to raise from, investors who are fine, who are very patient, like look at process, all that stuff. Or it could be interesting to kind of from day zero to be focused on companies that are building global businesses. Because in that respect, if you're not limiting yourself to one specific market, you are kind of focusing on backing Pismos of the world and trying to build a portfolio based on that. And then you don't have problems with, I have like $1 billion price tag on my portfolio. Like, what do I do? It's a global company. They have access to global capital. They can do IPOs on global markets and so on and so forth. And I think market is slowly getting to the point where you can actually make that part of your investment philosophy, because you kind of start seeing this necessity to build global and regional leaders. But then also you don't necessarily need to just focus on Brazil. You can also focus on Argentina for that sake, because Argentina is doing well, building global companies. So I would say like these three things. I think the only thing that should be, local VC should not be doing.
Would those three things be VC? I mean, is that VC?
What's VC? Tell me, what's VC?
What that's what they're learning in Stanford. And
it's like, what's
Berkeley.
democracy? What's democracy? I mean, it's different, right? Like there is a form of democracy that exists in the US, there's a form of democracy that exists in Brazil, there's a form of democracy that exists in Switzerland. They call it democracy, but it's absolutely not the exact same thing. And I don't believe it should be exact same thing. And I don't think that the classic VC model emerged in the US for many different reasons. And those reasons and the drivers are very different from those in Brazil, for example, or those in Argentina. So you can't really take the model, but forget the origins, and kind of think that it will just grow like a tree. It's not gonna work. And again, I think that's the reason why players that have blended strategies are so successful. And so like in Brazil, because everybody understands the nuances of the market, and the market is big enough for you to invest time and money and mental space in order to understand that. Because upside could be pretty big if you kind of crack the code.
But it would take longer.
But the code needs to be written. That's the thing.
So it will be, we're using an AI to build an ebook, and will be available right in the comments link. You can buy it right now.
You can't let AI think, right? AI has to you gotta create the data set and then let AI to draw an outcomes out of this data set. And I think it's important, but like also PR, like a lot of founders here build amazing businesses, flying low under the radar, because they don't like, marketing and distribution. But the truth is, the more stories are told from people who created something big locally, the merrier. And the number of those stories is very limited, partially because Brazil is like self-centric. It's a huge market, it speaks Portuguese. Nobody cares about English. But the truth is, like, unless that's
our scene. I mean, Portuguese. I love Portuguese, of course, but that's our scene, right? Because we are the only country that speaks Portuguese in the Spanish continent, region. We're the largest Portuguese-speaking country in the world, but we're still looking at how Portugal is. They set all the rules for the language. So, right, we're stuck in the middle.
No, but it's a great middle. It's a huge middle, right? But the truth is that, like, during the prior wave of innovation, I think most people who did anything in Brazil, they had connection with Brazil. But I think for Brazil to be truly global players, you have to attract players who believe in potential of the market versus like Portuguese, or have a family in Minas. So it's super important. And for that, you have to make an effort. You have to figure out how do you brand position the tech ecosystem or whatever entrepreneurial ecosystem in the country to the extent that it becomes attractive to global communities. One of them is the events, right? There's this FII event last week. I think this all is very important to bring people who haven't been part of the conversation before, and here you bring them to iFood office, like let iFood run the presentation on how.
Like Fabrício heading Prozos now, it's huge.
But remember, my first interaction with iFood was in 2019 when I spent 6 hours in their office, courtesy of one of my classmates who is the VP of restaurants and logistics in iFood today, Roberto Gandolfo. And back then, everything in terms of like last mile delivery, routing, it was handled by AI. In 2019, and I was like, I can't believe that. Like, how is this company existing? And I've never heard about it in my life. And by the way, most Americans don't know what iFood is.
They don't give a shit.
But iFood, why there are no more cases in business schools written about companies like iFood, for example. There are cases of Mobile, but Mobile is kind of an umbrella brand, which is amazing. But the iFood is not Mobile. iFood is iFood. Like, how do you build this?
And I would say it's even, Mobile is actually under iFood now.
Yeah, exactly. Exactly. Yeah, so it's like, it's important to attract people who don't know and position yourself to the extent that once they know, they slowly convert into, believers, or at least are willing to try and, take a risk.
Why are you so bought into Brazil?
No, because I'm Russian, and it's impossible to do anything in Russian at this point.
But you could be. You live in the U.S. I mean.
But I live in New York. New York is not U.S. Let's make it clear. New York is very different from the rest of the country. It's extremely international, extremely competitive city, where people come and then they really come to make certain
can make it
dreams.
Here, can make it
and that's actually true because, it's like really hard to make it. Somebody made this joke that, in New York, you got to be like a multi-millionaire to live like a low middle class, which is absolutely true. While in Miami, you can be a low middle class and live like a millionaire. So you actually make like a certain sacrifice when you move to New York and make it home. But I just really signed up for the philosophy of the city. So that's the reason why I live in New York. My second favorite city is actually São Paulo, and that's the reason why I spend so much time here.
So you're trying to make up with the São Paulo
No,
people.
I'm still stand by my words that New York is the capital of the world. But I love São Paulo, and the more I come, it's my 5th or 6th time here.
Really?
And the more I come, the more I love it, the more I feel at home. Yeah.
Who's Olga? I mean, where you come? You're from Russia, right?
Wonderful
You came from Russia, right? But how did you emerge as this podcaster spreading the word about Brazil?
It's funny because, that's the thing that I've never thought that I could spread anything, informationally speaking, because I'm pretty introverted. So the reason why I'm in Brazil are a set of reasons. I think one reason is because I come from emerging markets. And I started my career in venture in emerging market. Like I started my career in venture in Russia. In Russia,
okay.
And the fund that I was part of was the first institutional investor in Evernote. Because Stepan Pachikov, the CTO of Evernote, he couldn't raise money in Silicon Valley. Nobody believed in the idea. Yeah, he tried to raise and nobody invested. So he went back to his Russian roots, and my former boss wrote him an institutional check. And that was like a huge component of luck that had it on my career. Another thing, I think that company I worked for was pretty special because it was the biggest independent financial institution in Russia, and Temasek was a huge investor in private equity funds. And then
When was that, sorry?
It was 2008 to 2010. And then the person I reported to, she was like very tough Japanese woman coming from EBRD. So I kind of got to operate in emerging markets and understand what it takes to have this like different thought that comes from different experiences and different markets and so on and so forth. And then in 2011, 2012, me and my business partner, we started our first funds as a first-time managers. And our idea was like, let's not do anything where we compete with VCs from the US because there's nothing we can offer, counter offer. Like what would be our alternative value prop when you have like matured market, mature players, and we're just, testing our grounds. So we decided that we're going to be thesis-driven investor. We're going to be focusing on deep tech companies, enterprise software companies, and our value prop will be giving them an access to cheap and high-quality engineering resources in Central and Eastern Europe. Because that's what, Belarus, Russia, like all of these countries have amazing math schools, amazing engineering schools. Like some of the largest outsourcing software firms are coming from that part of the world. CTOs and a lot of US companies are Russians, Ukrainians, because these people are technically extremely, extremely advanced. And that was the thesis of our first fund. And at the same time, we wanted to look at the US, but we thought, well, we can't really make it like the part of our like strategy. So we decided that we're going to be focusing on the playground where US investors have not that much interest, which was Southeast Asia back then. And that's the reason why I lived in Singapore for 4 years. I was like flying all over Southeast Asia, Japan, India, Indonesia, like really interesting market, but it's really hard to build a VC business there. And for many reasons, one reason is mentality. Like in many markets in Southeast Asia, people love staying in the same position for many, many years, like working for 20 years for one company. Like they're risk averse. They work. I mean, India is different, but India is like, it's an animal that you really need to eat slowly and have a local partner who will not screw you up, which is important because there's no that level of reputation that matters if you are an outsider. If you're an outsider and you don't understand local mentality, you are an idiot. And you kind of deserved to be screwed.
Really?
That was mentality 2013, 2014, 15. But so it's a tough market. And I spent 4 years in Singapore flying all over Asia. And when we built that fund, from $5 million under management to $80 million under management.
Cool.
We have an amazing portfolio, like cybersecurity, alternative fuel. Like we built a great portfolio in this, several years. And at the same time, I also started, and it was funny because the fund is thesis driven. And I joined Techstars as a mentor, and I started writing angel checks in people I liked or whose strategies I liked. And I ended up being one of the first investors in ClassPass, like this.
Oh, cool.
Yeah, Winebox, which is a D2C wine brand, which we sold. And kind of by 2017, I was waiting for my O1 visa, which I got from the US government. Thank them very much. So I was waiting for that visa in London. And I was thinking that it's so interesting how I'm much more like not being thesis-driven investor. I really like betting on people doing interesting things in the big markets and not being restricted with thesis, because even at that point, I feel like technology accelerated so much that building a thesis for the investment period of the fund, which could be from 3 years to 5 years, it's extremely tough. You got to be very right. And the tech, the cycle that tech is emerging so fast. Nobody knew what's going to happen with OpenAI 2-3 years ago. Yeah. Nobody had idea. Imagine you build a thesis on something completely off, and then you have to stick to that thesis because you raise money.
You raise money for that.
So I had a lot of conversations with myself, like thesis. I don't know. I like doing this. And then when I moved to the US, I went to Stanford, right? And Stanford, it does really change how you think. I think that's the biggest thing, that it's not
People
about...
say that a lot. It's actually true.
You feel... I do believe that. I believe that they push you to think much bigger than you thought you could. And this is... I think that was the biggest transformation for me, that while I was in Stanford, I was just like, okay, so if I were to do something that I would not be able to do before Stanford, what would this be? And my answer to that, it was not joining some, whatever, Silicon Valley VC. I could have done that before Stanford, or go work for, a tech company. I could have done that before Stanford because I was already in tech for many years. But starting something new on the market that has no playbook written and kind of create something from scratch, that is something that I wouldn't be able to do without Stanford, because first of all, I had no connections with Brazilians whatsoever before Stanford.
I haven't heard of Brazil.
We're the same we're the same brick of country.
Here? No. Had been here?
No. And the reason why, because everybody told me it's extremely not safe. So even when I went to Iguazu waterfalls, I went to the Argentinian side. Of Iguazu. Really? Yeah, because Argentina is perceived to be safer from the physical perspective than Brazil. So that's why I never traveled to Brazil. I had no connection to Brazil. But in Stanford, there's a lot of Brazilians. Close to half of my class were Brazilians. I met a lot of Brazilians on the program before doing my master's. And it was this perfect storm that I was like, okay, so maybe I should do something very different at the intersection of venture capital and emerging markets. Because to me, emerging markets, it's an opportunity to do well and deliver impact. And to me, it's important. Because in the US, you're an asset type of manager, and I don't like asset management. I don't like Excel. This is not my thing. So it's like you kill yourself working crazy hours, but you are just an asset manager. And I'm like, I can do better than that. I don't want to do that. And that was this perfect storm. There's a number of Brazilians I knew. There was this wave driven by SoftBank allocating $5 million to the market. Yeah. It was this wave of all these new banks, popping in, and TechCrunch. And you see that these people are not even Brazilians, who managed to build this crazy big companies, raise capital. What is happening in Brazil? It was so interesting to me because it's such a huge market. And that's in 2019, I ended up the first time in Brazil. I ended up between my Stanford classes for 3 days. Took a red-eye flight here, red-eye flight back.
Out of
I was I'm curious. I want to know. And I'm curious. I'm really curious. And a lot of people, either from my class or those whom I knew, set up some meetings for me. And that's the reason why I spent 6 hours at iFood. Cool. I was absolutely shocked with, first of all, that Brazil reminded me about Russia in the 90s. It was that moment in Russia, in between Yeltsin and Putin, when people actually thought that democracy is possible. it was like very chaotic environment. Everything was up for a grab, but you could see the spirit, people kind of were running. They were running towards something, and that window, closed. But I could see that huge window of opportunity in Brazil. Yes, it's inefficient, it's bureaucratic. There's so many things that are part of emerging market environment. But this desire to run and fix the problem, and extremely entrepreneurial mindset, digital population, all of these things, and these companies that exist and nobody knows about them, and the funds, they just started to emerge. I was incredibly inspired, and I'm super actually happy that I went to Stanford and not in Harvard, because in Stanford you have this program called 390. So you can take 390. 390 means that if there's a certain topic that you really want to explore, but it's not represented in the curriculum, then you can get a sponsorship of either a tenured professor or a lecturer in management who teaches that quarter, and go and do your research for the whole quarter. And that's what I did on Tech and VC ecosystem in Brazil, sponsored by my lecturer in management, Rob Siegel. And Rob Siegel knew Andrew Streets from Stone, and Rob Siegel knew Roberto Mourinho Neto from Globo, and he introduced me to these guys as well.
So that's how it started?
Yeah, that's how I started, from the research in Stanford. And I just used my, stanford.edu to cold email David Velez. All these people responded, by the way. Everybody responded. And as I was doing my research, I was like, well, this is insane that this market is mature, and you have repeat founders, you have local capital infrastructure at the earliest stage created, you have accelerators that are maturing, and more important, people are loyal to Brazilian market. That's funny, because I am not loyal to Russia. I don't ever want to go back to Russia whatsoever.
Ever, right?
No.
Not even if Putin drops?
No. I totally don't want to go back to Russia. I think of myself as a New Yorker with a very strong interest in Brazil. But apart from that, kind of global trotter. But Brazilians, because the culture is so warm, because the families are so important, they are gravitating towards Brazil. And this is amazing. This is what a lot of markets don't have. A lot of markets in Africa don't have that. Once people are managed to escape, or India,
they never go back.
They don't go back. They create their local communities in this new, markets, and you have huge communities of people in the U.S., but you don't want to go back. But in Brazil, you do. Yeah. For many reasons.
10, 15 years, you get a lot of people, founders that live, even Sergio Furio, right? He didn't know, he had a Brazilian girlfriend at the time and came to Brazil, right? Brazilians, you have a lot of, Patrick Ruby from, he used to work at Facebook, came back to Brazil to work with Movili, and at Web Summit in April, he was standing on a booth, giving out leaflets about the company is working at now, right? A former VP at Facebook working as a founder.
There you go.
Startupeiro, right?
There you go. And this, you cannot fake it. This gravitation towards market and desire to solve the problems on the market. This is a very powerful thing that I saw in Brazil, and it's so easy. It's so easy to become part of Brazil, because think about the diversity of the population.
You're with the family.
I don't believe that most people outside of Brazil really understand how diverse the population in the country is. Largest population of Japanese outside of Japan in São Paulo. Largest population of Italians outside of Italy in São Paulo. Then you have a lot of Europeans, kind of Nordics and stuff in the south, right? They have more black population in the north, right? If I'm not mistaken. So it's interesting how Brazil, and Sao Paulo in particular, is an absolute melting pot where everybody is kind of accepted, because you don't even know who's Brazilian at this point, It's so funny. You go to this
all these people with Japanese surnames.
You go to Shinzushi, to this amazing restaurant, and the chef, the owner, he serves this traditional omakase, but he's so Brazilian in terms of how he communicates, So this is incredible. So the reason why there's so many unicorns built by non-Brazilians, because it's a welcoming culture. It's enormous opportunity if you understand and connect the dots around the world, and you come here understanding how these things could be different, because you're not coming from the status quo. You're accepted. it's a huge opportunity to test and so on and so forth. So there's like many things that I saw, and I was absolutely impressed. And I kind of started to think like, what do I build like for Brazil or in Brazil or from Brazil? And my initial desire was to build the funds immediately.
Ah, really?
To build a fund.
You never thought about
cross-border
a company yourself?
I've never been a founder before.
Okay.
I was an investor all my life. And I was kind of thinking about, okay, maybe I should build a fund like Valor, but on a smaller scale. And I actually reached out to Antoine, the partner at Valor, and he was very generous with answering my cold email. And he got on a call with me, and he introduced me to one of his portfolio company, because I said, look, I really want to understand what an outsider can bring to the table. There's so few outsiders that I cannot learn it from anyone that much. Like, I want to understand how I can be helpful to, startups in Brazil.
Sure.
And I ended up becoming an advisor to one of their portfolio, which was VTalk. And my caps, and I was very involved in helping them raise Series A and selling it at Gympass, and I ended up having shares at Gympass and ClassPass, for that sake. So I spent like quite some time trying to understand what's the value of an outsider, and I've realized that there's a tremendous value that an outsider can bring.
Where?
To startups. Like,
I mean, but where exactly? I mean, network.
Well,
vision.
first of all, nobody knows like how to like nobody really knows what's term sheets, what's convertible notes. What's the difference between convertible notes and safe? Like the multi-stage nature of venture capital, understanding that raising first round at like $500 million valuation might not be the right decision because you have to grow into that. So there's like so many things that for me are absolutely obvious, because even if there's something that I didn't know, I could like go to Medium, like search like term sheet mistake Series B or whatever, and you get a lot of content. And in Brazil, it hasn't been the case at all. So that is the one thing. The second thing is thinking big. When you come from the big market like the US and you see that the founder is completely underutilizing their potential because they're afraid that they're going to fail if they think big or they push their ambitions to the new level, like you see it, you call them out. You put this idea in their brain. It's like, maybe that's not everything you can do. Maybe that is something that you can start with. But don't put a limit on what you can do. Or I remember, I had this interview with my really good friend at this point, Bonifacio, who's the founder of iFood. And we talked about that. He's like, if I ever could imagine how big this thing could be, I would have never sold. And to me, and could it have been under their leadership or it had to be Fabrizio? Nobody knows. But the truth is, majority of founders still don't really even try to imagine how big what they're building can be. And I think like when you bring this mindset of thinking big.
Because things are so hard. I mean, starting and you have everything against you. When you're building a business.
Welcome to entrepreneurship. Like it's not proprietary trade of Brazil.
Is it like that in the US? Of
course, because in the US you are getting yourself in the red bloody ocean of competition from the day zero.
Okay.
So you are not fighting bureaucracy maybe to that extent, but you're fighting like another 20 companies that are poaching talent from your team, or you're competing on the capital, or you're still competing. The question is like, does it make sense to compete on the margins with a lot of competition, or maybe you will spend this time defining the odds on the market where there's no competition. There's no perfect environment for entrepreneurship, nowhere. There are nuances in Brazil, but I just think that it's like once you crack the code and figured out the exit barriers, you have a blue ocean opportunity to build, and this is something that US doesn't really have in many, many industries today. And that's how I ended up in Brazil initially. Like I ended up with being an advisor to the companies, starting building my angel portfolio. I'm an investor in like a number of companies, and I'm super involved with all of them. But the thing that I realized that made me kind of become more conscious about building a fund from the scratch is because I couldn't source the deal flow, because there's no information in Portuguese. And I was not interested in sourcing deal flow where everybody else can source the deal flow.
Sure. Yeah.
And also,
you didn't know Brian Reckworth at the time, because
I knew.
What I say is, in the US, if you want to invest in Brazil, I mean, he's the connection, right?
Yeah.
I mean, if you don't know Brian, you don't invest in Brazil from the US.
Totally,
so, I mean, you need more people.
Yeah.
Going back to your point, I mean,
but
educate.
To me, look, I come from emerging market. I understand that if you really want to invest in a big market with strong culture and tons of nuances, you can't outsource this thing. You got to go and learn, and that was important to me. And one of the things that I couldn't learn was pattern recognition among entrepreneurs. Like, to build a portfolio, to be good at VC, you have to be good at picking.
Yeah.
And I couldn't figure out how to pick.
Business, right?
Yeah, because like companies that I've invested as an angel, they're amazing companies, but I'm learning with them and from them, and I build my ability to recognize patterns. And this is something that I didn't believe I could build fast without speaking the language, and I didn't have the desire to learn the language, actually, because I thought it was such a dumb waste of time, in a way that, like, I will not learn the language enough to be good with evaluating portfolio in the next 3-4 years.
It's not going to make a difference.
Why would I do that? Even waste of time. It's not my strength. And it was also that time when, because of COVID and stuff, ecosystem around creators started to grow. So
right.
fast.
I was going to ask you when the
it was the idea. 2021. It was everything became so cheap in content. You want to buy a mic, the mic can be whatever. Buy a mic. People are comfortable recording over Zoom because everybody was doing everything over Zoom.
It was the only way, right?
Yeah. So it's another Zoom call, 1 hour? Yeah, totally. I said, okay, great. Headphones, I have AirPods in your ears, cheap microphone here, you record over Zoom. And then initially there was no Descript yet. When I started, so I had to outsource. I found an outsourcing agency that did the edits, but then Descript was launched, and I'm like, where have you been all of my life? At this point, I don't even need anything to do these things in content. And kind of that's this the realization that I can't build the fund immediately, otherwise I just lose a lot of other people's money, and I don't want to do that. I can't build the pattern recognition of the founders immediately because I don't speak the language. Actually, nobody trusts me because look at me. How can you trust me in 2019, 2020? How do I do it in a way that I don't need to learn the language? I build the trust by association, and I learn everything I need to be a good investor. And podcast was my kind of idea to do that initially. So initially it was a network building educational tool.
Had already done that with 20 VC, right? He was building.
There was he built all of his network in VC in the US using this, and I thought, well, why don't you just try to do that? And I did that. My first 5-10 guests were all people.
Who was your first guest?
Oh, Mike, of course, from VTalk. Test Rabbit, because his advisor. I helped him so much. There's no way he could say no to me.
Yeah.
And then there's a number of people whom I knew from Stanford. Some of my classmates ended up being building amazing businesses and so on and so forth. And then I just was very consistent with delivering consistent products to the extent that it kind of started to grow among especially early stage founders. And in 2022. Was it 2020? Maybe it was December 2021 or early 2022. It's so funny. I get a message from Zerinato from GetNetch on LinkedIn.
Really? Out of the blue?
Inviting me to South Summit. He reached out to me. He's like, hi, wow. I'm the founder of GetNetch. I like what you're doing with your podcast. I would like you to join us at South Summit. Cool. And I was like, wait, people know of my podcast, and I can.
Is anybody listening to this?
I can go and speak at South Summit because of my podcast? No way. And that's when I started to put a thought into it. It's maybe it's not just my problem with access to information. Maybe it's actually the problem. And by the way, 65% of our audience today is in Brazil. So, yeah, so it's
in English podcasts?
In English podcasts, and they listen on iPhones.
Wow.
Over 65% of our listeners listen to podcasts on iPhones.
You have the 1%.
And then you have clusters of those people who are in all of this tech areas, and people, when they post that they listen on Instagram, you can see beautiful cars, and we have a good audience in Brazil, for sure. But the truth of the matter is that access to information is siloed. you know?
Sure.
And when you build a product that gives an access to information that is valuable and that allows you to make better decisions, that's things that grows. Like, you don't need to pour marketing dollars into it. And that was the case in our case. I think things that we did right at that point was a few things. So first, when I got this message from Zerinato and I came to South Summit and we recorded an episode with Zerinato and also with my friend and classmate from prior program, Cassio Bobson from Zambia.
Oh yeah, Cassio. Yes.
I kind of started to think, well, maybe I should be serious about what I do. Maybe that's my opportunity to become an entrepreneur myself and learn all the elements of building a content platform, because that's valuable for me. That is critical, I think, for dragging capital and businesses to the region, because nobody will deploy anything if they don't know what they're signing up for.
They're going.
So why don't I just, become extremely serious and just do this? And because, funds, everybody can go and build a fund in Brazil. I didn't give up on the fund, but I thought, well, am I the best person in the world to do what I do today? And with the podcast, I think I am.
Okay.
For many, many reasons, including my extremely high level of energy. Like, I fly all the time. I came to Brazil from Costa Rica. I had a recording in Costa Rica with El Trueno, which is a family office.
You flew to Costa Rica only for...
Yeah, only for El Trueno recording. Yeah, El Trueno is a car dealership, and they deploy a lot of capital in Latin America. They're LPs of a number of funds, both in Brazil and in Argentina. And so I do a lot of legwork, and a lot of people will not do the amount of legwork that I do.
Do just over Zoom.
Yeah.
Yep.
So this, and then I can put like 10 hours in preparation for every recording, and I will feel fine doing that. So there's a lot of things about me that make me good to do the specific thing. While I thought, well, fund, there's many people who can build the fund, So, and also, what's the value prop? Today, if I were to build a fund, which I will probably at some point, I have a hell of a value proposition. I have a content platform that gives access to some of the best entrepreneurs and investors in the region and the world that are interested in the region. Companies I invested in, I help them facilitate partnerships and, deals with everybody. People who come through the network of the podcast. Like, content is so underrated. And especially when you think about, like, how do you do content marketing, or how do you do marketing today? Most of the marketing is paid.
Yep.
Most of the marketing goes to
Google
the platforms.
Yep.
And when you create like a domain that is alternative to just pouring money there, but drives faster results, that becomes a very strong value proposition for startups and investors as well, because like, you want to have someone who brings something new to the table. And if I were to build a fund, I will absolutely use that
in a playbook.
Is something that I would bring to the table, because the playbook is changing, and it's the way to think about the value in venture capital is changing, because things that startups need help with is changing. PR, messaging, marketing, branding. Brand becomes important. Distribution becomes extremely important because technology is becoming commodity. So there's like a lot of these changes that leads to creative thinking in venture capital, especially in the market like Brazil. But in Brazil, it's amazing because you always have to think creatively. There's nothing you can build like in any form of standard way.
Yeah, you have to improvise all the time.
Yeah, so it's a very long answer to your question, but I ended up where I am today because I kept on iterating and finding something that I think is scalable, given my interests, given my strengths, and given my passions at this point.
But what's the end game? I mean, is JCurve a product? You're going to be making money out of it, or it's just generating deal flow and relationships for your upcoming fund? What's the idea?
The answer is I don't know, because an
entrepreneur who knows is doing something wrong, right? Yeah,
because you made a step and then you see a little bit further, and then you made another step and you see a little bit further, because the way we created the content in 2021 has nothing to do with the way we create the content today. Like, we have long form content, evergreen content. We have we're deconstructing leadership versus quickly bringing people up to speed in terms of what's happening in this company and in this company. we're more focused on, actually learnings that are applicable for founders because the goal today, as I see it today, there are two goals. One goal is to create leadership examples for those people who are willing to get into entrepreneurship.
Okay.
Because Brazil and Latam, for that sake, they need examples. They need to see other people who made it. And people themselves, possible. They're not you have people who are good at telling their stories. Like Martin Migo is extremely good at telling his story. But his story is like a $10 billion story at this point. Not necessarily relatable for many people.
Most of the people.
Yeah, but when you bring people and you tell the story, it's like, oh, maybe I can do that too. Oh, but this guy comes from Botachi or whatever. Maybe I can do that too. So this is one thing. And that's the reason why a big part of the content strategy is around how do you deal with problems, like how do you scale yourself as a leader? How do you hire a team? How do you fire a team? How do you invest? How do you maintain your mental health? Like, what do you do in order to stay focused? Like, so this part. And then the second part, which is also important, is to create enough information that would allow people be more comfortable with potentially allocating capital to the companies in Latin America. And this is a different.
They see something that's being built.
When you bring, for example, CRM Bonus, right? Zolko, it was his first interview in English ever. He never gave interview in English.
Yeah.
Okay. And kind of explaining the complexities of the market, but also explaining that you can make money and you can be profitable. And his business was profitable since month 3. On this complex market, and you can attract capital from some of the best players, despite the fact that you have big service components and the first initial idea is more of a customer acquisition strategy versus the tech product, that you kind of build products as you go. That is important to make a decision. You need to understand what's the playbook of the building company. Like, how do you build companies in a market like Brazil? What are important factors that you need to pay attention to? So those are two things that we are focusing on today, and hence we bring people who help either generate, or actually who help to do both, because normally those people who are leadership models, those are also people who made it, and they normally make it in a non-conventional way. And also for that second part, I started bringing global and local investors that have very strong reputation of being successful in Latam and in Brazil over the last 20 years. Yesterday, we released an episode with Susan Siegel, the woman who started early stage VC in Latin America, is part of Chase Capital Partners. She's still a member of Mercado Libre. And we recorded amazing conversation with her. And she was talking about, she introduced Brady's bonds. She was dealing with with debt crisis in Mexico in 1980s and 1990s. She was chairing Chilean committee, the things that she did in this region, it's insane. And getting her perspective and seeing how much she believes in the future of the region.
If she's a believer,
when you deal with debt crisis, you either lose hope or you convert fully, I think. So that becomes important to bring the perspective of people who have been successful with making money in the region over the long period of time. And this is in addition to this founder things. And to me, there are two markets that our priorities today. It's Brazil and Argentina for different ways, because you want to benchmark them against each other. Because the reason why the companies succeed, there's different reasons. And the reasons, founder profile is a different profile. I brought Doug from Swap, and then I brought Gaston from Pomelo. Completely, absolutely different go-to-market strategies. Doug is focusing on, penetrating specific niches and building very personal, deep relationships with their clients, and making sure that they're penetrating the vertical before they scale. And Gaston launched in 15 markets, build operations in 15 markets, scale the team to 200, whatever. I don't even remember how many people, and both are successful. But these are different markets, Doug has an opportunity to build a vertical solution and, make money in Brazil, but good luck doing that in Argentina. So to me, that's the reason why I'm trying to, although most of people are coming from Brazil because it's our biggest audience, and people in Brazil, they love listening the stories of Brazilian founders. But I think it's interesting and important to put things in perspective of Argentina, because Argentina is doing an incredible job in terms of tech, in terms of entrepreneurship, in terms of giving back to the market, building engineering centers, and all this stuff.
And Nubank is there.
And I just think it's important to acknowledge great work and show that people could do great work in many different ways. And so these kind of things that we're focusing right now. What's the end game? I don't know. Whether I'd like it to be a product, yes, for sure. It has to make money, because otherwise, I still remember your advice that you gave me.
Me? Really? Did I?
You did. You said that I wish I started to, hire people and build team faster versus doing those things by myself for as long as I did.
Yeah.
And I'm getting to that point. I'm getting to the point that if I don't start scaling, and I have many things which I know need to be scaled, then it will be like
I'll always be.
It will be like a very small, growing but smaller business.
Yep.
How to try to convert this content platform into a product, that's a great challenge right now. And I don't know. I have hypotheses and we're testing them. I know what I don't want to do. Like, I don't want to sell mattresses through my platform. So that I'm not going to do.
That would be good for mental health of founders and investors.
Selling mattresses.
Well,
like
you have to sleep
like
well.
Tim Ferriss does. I don't know. Not sure. No. So that is not area of my interest, but I'm thinking and I'm interacting with different ways to turn that into a product. And there are more than one ways to do it. I just haven't fully committed to any of them yet. Yeah. Again, long answer to your short question.
I mean, we're trying the long format here as well. So
you see, I'm like, there's no escape from long format when you're sitting down with me. But this is Brazilian in me, like every dinner lasts for 4 hours. Lunch at least 2.
I mean, how much time did we spend here before starting recording?
I know.
Like 15,
I'm telling
20 minutes?
I'm like more Brazilian than I'm willing to admit at this point, I think.
What do you have that now? What are you? Which are the places that you are more Brazilian now, you think?
I think New York. I think when I go out for dinners, I love to sit down, at least 2 bottles of wine in the system, at least, bare minimum. Like really like long conversation, And this is the thing, in New York, in most restaurants, they kick you out of the restaurant.
That's the thing in America, right? In the US, everywhere, they kick you out. I mean...
Not everywhere. In New York specifically, they do. They have if you're party of 2, your limit is 90 minutes. And
really?
Yeah.
Is that a thing?
90 minutes, yeah, because they need to increase it. Because restaurant is a professional run business. So in fine dining, in my favorite restaurant, fine dining, Frevo, the limit is 2 hours for 2 people. So you go there because they have 2 sittings a night, 6 to 8. Then they need to prepare the restaurant. Then it's 9 to 11. But if you go at 9, they're not going to kick you out because nobody's coming at 11. So you can,
just
stay and keep drinking wine and keep having amazing conversations. So you got to go around the limitations. But overall,
like a good Brazilian.
But overall, the whole idea of not being transactional. First times, when I started coming to Brazil, my schedule looked like 12 to 1 p.m. lunch, then 15 minutes to get to my next meetings. And then I realized very fast that there's no such thing as 1 hour lunch in Brazil.
Yeah.
Especially if you never met each other and you don't have a specific agenda and you're kind of exploring and getting to know people. And I was, on the first maybe 2-3 trips, I was constantly late everywhere. And then I learned, and
That's
I'm like, okay,
Brazilian
well, it has to be, right. And then it has to be maybe 2.5 hours allocated per lunch. Yeah. And then I'm not going to be late, So yeah, you live, you learn. But this part I love because I think the more time you spend with people, the stronger connections you build, the more opportunity to do something interesting and creative. Because these things, they emerge as a result of a dialogue. As a result of conversation. That thing does not exist in Zoom. That's the reason why I don't do anything in Zoom. Even recordings.
You don't do Zoom anymore?
No, we do only in person. The reason
Really?
to it is the quality of the conversation that you have when you're sitting across each other, and the intimacy of the conversation that you have is like completely different level. And it's worth a trip, it's worth all the, expenses, booking studios for sure, because the outcome is just so incredible. Yeah.
Yeah, you said I think it was during the conversation or before the conversation, you said the audience, right, increasing or a large audience is not your goal.
No, I like to be niche because we want to have 100 people who absolutely love you, then 1,000 people who somehow like you. And this is important to us because we want to be influencing the thought in a very specific domain, which is entrepreneurship in Latin America, capable of attracting capital on global markets. That's our kind of audience. And not so many people are into that. Some people are curious, but the extent to which you would be willing to listen to every episode, our audience listens to every episode with a very strong retention. You have to be niche.
Right.
And you also need to understand what your audience wants to hear. Because if you're broad and horizontal, then a lot of people have different desires. But when you're niche, what they want is very similar on average in the audience.
Sure.
Who they want to hear from, because I have like a lot of suggestions. Or you got to interview this person, or his story or her story is phenomenal, or whatever. Or, if you interview this person, here's what we'd like to know. And this level of relationships with the audience you can only build if you're a niche player. Yeah.
Definitely.
And again, as I told you, I'm not going to be selling mattresses, so CPA doesn't really matter to me that much, and I can focus on being niche. That is important. And then the quality of content is also extremely, extremely important.
Yeah, very. You know what you're talking about, and the people who you interview really know what they're talking about, right?
Exactly. And you want to create this data set, informational data set that promotes heroes and attracts capital. This is a goal.
Sure.
Yeah.
Good. And how long will it take for the region or for JCurve to be the 20 VC?
We will never be a 20 VC because our format is not 20 VC. 20 VC is very much focused on VC and tech and deals. It's very transactional to a certain extent.
Okay.
And I think we are much more closer to Tim Ferriss' show for that sake.
Cool.
Because we are more about leadership. I want to say maybe 10% of time we talk about companies.
More, okay.
Most of the time we talk about how do you deal with partners, how do you form the partnership in the company? How do you scale yourself as a leader? What do you want to be? I loved our conversation. There's so many conversations that I liked, but I loved the story of Zolko, who's look, I know what I like. I like to sell and build products. I don't want to be a CEO. I hope I will not. But the understanding and kind of understanding what you're good at and how you should be thinking about your strengths and leadership and what it takes to scale yourself. And if you're ready to do that, are you actually a person from 0 to 1,000? These are the things that we talk a lot about. And I would love to do that. That's the reason why we're not 20 VC, and we're not going to be a 20 VC ever. Yeah.
Who's which, I don't know if you're going to put yourself into this, but which, we'll say names, but which is the episode you like the most?
I can tell you that the episode that got the most listens last year was the one with Eduardo de la Maggiore from Betterfly, because the guy has a spectacular story of churning from JP Morgan, moving to Africa, winning, being a runner-up in Ironman, and all of his stories are phenomenal. And he is also a father to, I think at this point, 3 kids.
Wow.
And he's running this company. Yeah, Sensei, his story is phenomenal. He's very inspirational as a leader, I think. So that one was an absolute leader. What I like recently, I actually really like, we haven't released that yet, but I really liked our conversation with Cirque guys, with both of them. Because, when you think that the level of transformation that they had to go through in 2 years building financial infrastructure under central bank without knowing what they're signing up for, because nobody knew the amounts of receivables, and they were constantly under pressure of the COVID pressure, and they were joking that their valuation is much smaller than any of their client makes a year, like all of this stuff. And seeing those people going through these things, and learning and transforming, understanding that it's extremely tough. And also, talent is really tough for them as well, because what they're building did not have an educated set of talent. So they had to do so many things. They had to disrupt industry, do the educational element to it, scale the platform, deal with regulators, and build and nurture a team in-house. And they had to do it all. And, and they did it all. And they ended up raising capital from Mubadala, which is insanely hard to do. And they did it all under the radar.
Yeah.
And this is phenomenal. And I think Brazil has so many stories like that. They're just not being properly communicated. And so I was under deep impression. I was thinking about these guys like yesterday. I was like, this is like so insane, because it's a deep infrastructurally important solution for Brazil and from Brazil that has an opportunity to scale in other emerging markets. It might not have application in the US, but when you think about all of this, like other markets that exist that have similar problems, it's an insane company. I absolutely loved our conversation with them yesterday. Yeah.
Is there a name that has turned you down? I mean, a few times, or is there someone that you really want to?
Oh, many people do.
But so there are names that you want to bring that never come.
So
who?
People who I would want to bring. Ebanks doesn't answer my emails at all. Joao, he's just not
come on.
answering my emails at all. But I wouldn't say that people who I'd really want to bring, they normally want to come, because I think they do respect the level of work I put at this point pro bono to support this narrative around the potential of ecosystem in Latin America. And a lot of people respect that and support me. Like the support system that I have in Brazil, it's absolutely insane. Like people put their reputation when I ask them to make an intro. Like I brought Susan Siegel to the pod. Susan is CEO of Rockefeller, like David Rockefeller's foundations, and the woman who is like the most respected woman in the 90s, 2000s, board member of Mercado Libre. So I would never bring people like that if I didn't have a great support system, and I do have it. So I can't complain. Most people are coming. Those people who are not coming, maybe it's not a priority, and that's fine as well. But also, you don't want to squeeze all the winners in one season, right? You want to
have to save for the.
You need to save, but then also, a lot of people still don't trust me. A lot of people say, people like, who is Olga? And a lot of people don't trust me because it's such a weird thing to, and it's always surprised me so much, because I remember when I lived in Southeast Asia and I had to travel to China or Japan, and nobody ever asked me, like, why are you interested in China, Olga? Like, you're not Chinese, clearly, and you don't speak Mandarin. Like, why are you interested in China? Nobody ever asked me this question. But Brazilians are so insecure about their own potential from the entrepreneurial perspective that they're very skeptical about somebody else's interest in the country.
Really? Why? And I'm
like, how stupid is that? Like, why not? Like, why not? Like, amazing market. And the reason why so many tech unicorns started by non-Brazilian is exactly because a lot of non-Brazilians believe in Brazil more than a lot of Brazilians do, which is a paradox of Brazil, like a complete paradox.
True. So now everybody knows you. That it was great talking to you and listening to your story. Thank you so much for this. I'm glad we made it. I hope I acted upon to your expectations. You overachieved. Thank you so much. That's my nature, overachiever. There we go. Oh, come on. Not a bragger and humbleness. Humble, yeah, you're humble. What's your biggest weaknesses? I work too much. That's also very Brazilian. That's also very Brazilian. You learned well. Thank you so much, Olga.
Thank you.
Espero que vocês tenham gostado do papo tanto quanto eu e ficado aqui para escutar esse nosso formato longo. Obrigado. Até quarta-feira que vem com o próximo episódio do MVP.